also have Sanjiv Bhasin, the director, joining us on this show. Sanjiv, hi, thanks so much for making time and speaking with us. Let's start with Tata Motors. I know you were a fan at least a few months ago, but after this kind of valuation uptick that we have seen coming in on account of this Tata Tech, stake sale as well, do you think the stock is likely to get a leg up, or do you think it's factored in the price?
Yeah, good morning, Anisha. Firstly, Jai Mata Di, wishing all a very, very happy and prosperous Navratri. And yes, the optimism should be back. Tata Motor has been a dream stock. As a disclosure, we own it for much lower levels, but a large part of that may be in the price. The fair valuation for TTML, Tata Tele, the listed arm or the unlisted arm, will come of time. But I think maybe they were in a hurry to encash it to shore up their cash, so that's why they came out with this. I think Tata Motor is fully priced. Anisha, if I had to go, I would go with Ashok Leyland. That would be my top pick. By the way, firstly, let me tell you, the weekend has been superb. India drubbing Pakistan and Afghanistan beating England. So I think take it with a pinch of salt. We are on an optimistic note, particularly in Asia, the World Cup, the type of spending, the type of record rush you saw in Ahmedabad, and it's only going to get better. So good times are here, and by the grace of Jai Mata Di, we would be very, very positive on the market bend going forward.
Oh, yes, indeed. And of course, we did see a great victory as well pan out on the cricket stadium over the weekend. But that aside, it's a very busy week, Sanjeev. Lots of big numbers. And Nikunj was alluding to the fact that the FMCG sector is going to be very closely watched out for. Ultratech Cement, HUL, Nestle, ITC. What is your outlook on all coming in one day is what I mean. What's your outlook from the FMCG majors?
Yeah, so Avan, actually, if you see in the last week, actually FMCG has started to hold out. Some of the banks and IT stocks, because of Infosys, have taken a backseat, and there is a sectoral shift. Maybe I think Lever and ITC had come down to valuations where they became again attractive. And like you said, there can be a little bit of pressure on input margins and the volumes. But now we are looking at the best period which is there as far as sales go, as volume, and as far as new products. Nestle has taken the cake. I would say add a Marico over here. Most of the weak earnings may be in the price, but the type of product portfolio Marico has, that is one stock which we are accumulating. So Nestle, Marico, and I think hold on to Lever because it may have bottomed out in the last 1 month, and it could be the one which can give legs to the Nifty going forward.
Nestle, Marico, HUL, these are the names to watch out for when it comes to the FMCG majors.
But then there's HDFC Bank's combined entity quarterly numbers that will come out today. Sanjeev, what should the street brace themselves for?
Well, I think most of the bad news will be priced in. You have to give them a couple of quarters for them to consolidate. Yes, the average yield will have fallen, but that is already in the price. I think this is a brilliant time to accumulate the 7th largest bank. There can be another 2 quarters of underperformance. But I am, on the other hand, very, very optimistic on their CASA ratio growth, their credit expansion. And I think this 1500, 1525 levels is a very good time to accumulate. Results, Avan, according to me, may be a little bit of a beat on the upside, and we'll take it with that. But the language going ahead, they've been very, very conservative and always over-delivered. And that's what I think will be the going forward.
Okay, so that's about HDFC Bank. But what about Avenue Supermarts, Mr. Bhasin? Because the numbers were a bit somber, at least on the margin front, they were a bit disappointing. But the question that Street is asking now is, A, is it priced in already in terms of the negatives? And is it perhaps the bottom, and from here we'll see a sharp recovery? Your take?
Yes, so Anisha, see, Avenue Supermart has been on an expansion free, and as you open more outlets, the net costs add to your margins for a time being. I think they have now reached maturity level. And like you see, you've seen the other supermarts, all of the likes of Geo, the likes of Trent and so on, do extremely well. So Avenue is a quality stock. I think it has underperformed the market for the right reasons. But I think all of that is in the price. Look, if you are optimistic on the spending patterns, and I think once we are through this geopolitical tension, there will be a sharp comeback, particularly on some of the stocks which have underperformed and which have now enough firepower to take you higher. So I'm not a fan of Avenue Supermart because it has always been a very expensive stock. But I think given the pedigree of the management, the new branches which they've expanded, Because whenever you go to tier 2, tier 3 cities, all you see is Avenue Supermart. So I think their brand expansion will pay out. The next 2 quarters could see margins actually accrete on the upside.
Just reading this morning's headlines, Sanjeev, and a lot of focus as well on real estate. For instance, Prestige is talking about how bookings will hit the 20,000 mark. There's also redevelopment in Mumbai of the slums with Lodha and the stocks. We've seen the kind of terrific rally really play out in real estate. Is it still a good time to enter, and where?
Yeah, so Aman, that is what most of the people are missing, the woods for the trees. It's capital goods and it's real estate. I mean, DLF and Godrej are hitting recent new high. DLF is hitting all-time highs, and so have the capex stocks. You've seen the likes of Purvankara, the Brigade, and even over all of them. Because it's the wealth effect. Aman, gold at new highs, stocks at an all-time high, and the wealth effect is tremendous in the upper 10% of the category, and that's why you've seen real estate get mopped up. It's not for any reason that a 10,000 square foot in Camellias got sold for 100 crore. Maybe 100 crore was a one-off, but still it tells you that the appreciation in capital assets is just starting. Along with that, you will have the inflows, that is cement, steel, copper. Copper prices are again up. So you cannot, that is what the market is pricing in. And you've seen, along with real estate, NMDC, GMDC, which are core earth producers, they are doing extremely well along with Coal India. So I think this is telling you that the capex side, the real estate, the wealth effect is tremendous in India, and it's just starting off.
Wealth effect is tremendous, Sanjeev, but are people spending that on the likes of PVR INOX because they have come up with a subscription plan, or they are, you think, gambling it away with the likes of Delta Corp, because that stock has been in a bit of a tizzy, and now 6,300 crore worth of more, tax orders that the company has got?
Well, remember, orders are very easy to pass. It's the litigation and the pass-through which takes years, maybe months or years. And sooner rather than later, there will be litigation which will solve that. You cannot have a better business than casino and online betting, which is gathering more steam, and it's where the new millennials are putting their money. So there will be an afterthought on that. And like I said, I think PVR INOX would be a very good proxy play to how spending patterns for the common man picks up. We've had a buy on GFL, that's Gujarat Finance Fluorochemical, which is GFL. That stock has been on a tear, and we still think that some of the underlying sectors which are, not that well unnoticed have started to perform. So who thought that GMDC, NMDC will be coming to new highs? Who thought Coal India will cross 300? It's on the back of superb, actually, businesses which are now getting realized. And I think copper and steel and aluminium will be even do better once this, because of this escalation of geopolitical risk.
Okay, so those are some of the stocks that you like. But since you were talking about real estate, Sanjeev, and the fact that you like it, people are missing the forest for the trees. But what about the cement names? Because we were discussing that's one sector which had been written off per se. Which are your top recommendations?
So we have a disclosure on Ultratech, ACC, Ambuja, and Dalmia Bharat. These are 4 stocks which are under our coverage. We have ownership in them, and we think that they are bound to outperform. In fact, I see Ultratech in 5 digits, 10,000 rupees. I see ACC, Ambuja being the biggest beneficiaries because of the Adani reduction of debt. And you could it was for the asking 6 months back when fear drove those. Those are very, very well-run businesses. Dalmia Bharat itself now, after the JP acquisition, becomes a rather big play in the middle of Bharat, in Madhya Pradesh and so on. So I think cement is a no-brainer, given that price increases will be passed on. And, the best of the construction pattern, whether roads, infrastructure, commercial real estate, is all on the anvil as growth. And that's why you are seeing the markets take a precursor, and those stocks and sectors tend to hit new highs before the time.
All right, Sanjeev, going to let you go on that note. Thank you so much for taking time out and joining us today.